Okay, good. I've already started recording, so anyway, I'll get started. Let me just off my music as well. Okay, let me just get my slides on. Okay, great. Right now we have 52 people actually online. Okay, first of all, really thanks you guys for coming in. I understand that right now we are in the middle of this COVID thingy, and I'm sure that you guys actually have a lot of activities at night. I'm pretty sure that on your Facebook, you easily would have 3 or 4 different Zoom people doing some Zoom session. So I really appreciate you guys for actually coming. So anyway, this is the first series of this thing called Buy or Buy. So the purpose of this is basically every session I will actually share one company. Okay, more of the fundamental, whereby I share with you guys about what is this company doing, the background, some financials. At the same time, end of the day, I think the decision is whether to buy, B-U-Y, okay, or whether to say bye-bye, B-Y-E. All right, so that is the purpose. But again, later I will have a disclaimer side that this is actually based on my personal take on this particular company. So today I'm actually sharing this company called Zoom. This is actually a US company, but I'll actually rotate between US company and Singapore company. I do understand that a lot of people are actually really interested in Singapore company as well. So I'm just going to do a balance. So yeah, right now I'm actually on my PowerPoint slides. Okay, if you guys are able to see my PowerPoint slides, can you just put in the chat group 111 so I know that you can actually see my slides. All right, fantastic. Okay, so anyway, along the way for the next, I think about 45 to 1 hour, I try to do it as short and sweet as possible. We will be typing in a lot of numbers, okay. But very importantly, right now, the 40, we actually stick to 3 digits so that y'all will not use the number to get by 40. Yeah, I think that is important. Okay, so let me just get started. Okay, so let's get started. Time now is already about 8:38. So basically, my name is Bowen. I'm the co-founder of Ultimate Investing. So this is basically a series that we actually put up for you guys. Just for those of you who are new, basically I just wanted to share also that we actually have a Telegram where we share about Singapore as well as US stock updates. Basically, you can see on the picture, we basically list down the 30 top Singapore company and we share with you guys based on fundamental whether can you go in or should you actually wait. And of course, if you need to message us for any particular reason, you can also go to our Facebook and just drop us a message. That is how you can actually get in touch with us. Okay, so this particular company that I'm going to talk about is this company called Zoom. And of course, very interestingly, we are now using Zoom to talk about Zoom. So I'm pretty sure that most of you guys, you have heard of this company probably in the last 1 month, or maximum some of you guys a little bit more advanced, maybe about 2 months back. But this company suddenly shoot to fame for multiple reasons. There's good reasons, and at the same time, there's also bad reasons, which later I'm going to touch on as well. Right, so before I start, I have a disclaimer over here that basically, in short, the following presentation is not a recommendation to buy or sell and is for education purpose only. So yeah, you should take independent financial advice from a professional or do your own research and verify any information based on this presentation. So very importantly, after I share with you, please go and do your own check as well. All right, and now of course the last one is we will not be liable, okay, in the event of any losses arising from such information. So I love to put these slides, okay, partly because again it's to protect me, but at the same time, after I put this slide, it also shows that I can basically just share my point openly. I don't have to hide. I don't have to give you a politically correct answer. I will just basically share what I feel about this company and personally whether I will buy or I will not buy. All right, if you think this is good, okay, I just need you guys to accept this disclaimer by putting a 888 in the chat group. If you accept the disclaimer, can you just type 888? Okay, very importantly 888. Yeah, so everybody we can all work together. So right now we have 58 participants. Okay, cool. I think I saw 58 888 over there. So I can continue. So I'm going to start with this very short video. All right, so sit back, relax, and enjoy this very short video first. right, so very interesting, very interesting. We end with this company called Logitech. Okay, so for those of you who just came in, this is not the company that we're going to talk about. We are going to talk about Zoom. Okay, but later on I also touched about this company called Logitech, that because of the rise of Zoom and the rise of video conferencing, people are actually buying a lot of webcams, people are buying laptops related items, mouse and stuff like that. So Logitech, I would say that they are also be able to get the tailwind and get some advantage of this rise in this trend as well. So I'm going to start with the key discussion for today. So first of all, I'll talk about the background, understand the benefit of video conferencing, and at the same time, why Zoom is actually booming in current situation. That's for the background. Secondly, we talk about the growth potential in terms of the industry, and at the same time, I'm also going to share on the company itself. Okay, what is the growth potential of Zoom? And of course, the third one, we're going to look into the financial. So we're going to do some financial checks on Zoom. And subsequently, we talk about the competitor. Who are the competitors out there and how strong are they? And of course, we will move on to the latest news on this particular company. And the last final one is basically the conclusion, which is whether to buy or buy. All right, so this is going to be the key discussion. Going to be very, very exciting, lots of information. So let me start with the first one. Basically, company name. This company is actually, full name is called Zoom Video Communication Inc. Ticker symbol is called ZM. So it's actually listed in the US Stock Exchange. For those who are not aware, it's actually founded in 2011. So not too long, about 9 years back. So the core business, as you guys know, is basically a platform that connects people through video, voice, chat, and content sharing. Yeah, basically like what I'm doing right now. All right, and I'm actually a premium customer of Zoom. I actually subscribe to Zoom, so I do pay them sum of money on a monthly basis. So this is the Zoom price. I just want to bring you guys to why it actually shoot to fame, because as you can see right now, the share price is $143 based on this afternoon. And you can see that it was listed actually only last year, somewhere around May, at a price of around $60. So within about a year, you can see that it doubled. In fact, more than doubled. It went to close to $180. So almost tripled in a year time. So amazing company, amazing share price. For those of you who bought it early, luckily for you, you probably have tripled your capital. All right, so I think what you guys will be interested is right now, can buy or not. All right, so let's move on. So let's talk about this thing called video conferencing as well as some of the benefits. So as we can see over here, the key top video conferencing benefits that you can get is actually this thing called reduced travel. Okay, reduced traveling. So which means that instead of, for businesses, especially for business in the management, you don't have to really fly over to meet your customers or to discuss certain project. Basically, everything is done through Zoom, something like this, okay, with a laptop. So it actually reduces a lot of travel cost as well as traveling time. Then that comes to the second one, save cost and save time, and also save travel. All right. Then of course the fourth one is improved collaboration. So we can see that Zoom, other than Zoom itself, in terms of the software itself, they actually try to collaborate with a lot of different software. Like for example, right now, I think with all this software, I can actually link to YouTube, I can link to Facebook, so everything is integrated. So in the past, it might not be as smooth, but right now, I would say that this is amazing. The way Zoom actually incorporates everything is wonderful. And of course, recording and archiving, especially for business meeting or even a business conference, whatever we see over here, I can actually record. Like for example, right now, okay, let me just check, am I recording? Yes, I am recording. So I can actually use this recording and I can actually duplicate it. I can put it on YouTube, put it on Facebook, put it everywhere. I don't have to say it again and again and again. So that's also one of the key of this kind of sharing, as well as like the video conferencing, the benefits. And a lot of people will be thinking, but why is it that only recent times this thing actually become more well known? Okay, let me share with you the previous obstacles for video conferencing. All right, so last time, as you can see, the top barriers why people are not using video conferencing is number one, the meeting rooms aren't equipped for video. And the second one, the meeting rooms with video are always booked. It's too costly to make video available to everyone. Video meeting rooms are for exclusive meetings, a bandwidth constraint, Workers are uncomfortable, workers are unaware. they have video, and employees are just not interested in using videos. So you realize that it's very much talking about a company point of view, okay, whereby we have a long meeting room and then we have a video conference at the front. Then maybe from Singapore, I talk to my customer in US. So in the past, people talk about video conferencing, straight away they would relate to corporate use, okay, meetings, especially between different countries. So as you can see over here, meeting rooms. But right now, am I in my meeting room? No, technically you can say that this is my meeting room, but this is also my bedroom. So my bedroom actually becomes my meeting room for now. All right, and is it very costly to actually do video conferencing like this? I think I'm paying about less than $50 a month, okay, or around $50 a month. I think it's very, very reasonable. Okay, and of course, bandwidth constraint. I think right now, with the technology, with the way they actually do everything on the cloud, bandwidth is actually being managed well. So everybody, we can actually come online. Like right now, we have 50 over, let me just do a check. Yeah, 62 people right now watching, and I feel that it is quite smooth. Not much constraint with the bandwidth. Even I think with the video just now that I played, it should be pretty smooth as well. And of course, we talk about employees not interested and workers are uncomfortable. I think when you give them a choice, of course, nobody will want to appear on a video. But right now, with the COVID and as well as the lockdown, if your boss wants you to be on Zoom or any other video conferencing, can you say no? Okay, the problem is no. So after doing for 1 time, 2 times, 3 times, people kind of get used to it. Okay, to actually talking to a laptop or talking to a camera just right in front of me. So again, it's about being accustomed to it, getting used to it. So again, you can see that all this barrier is being removed. Of course, it was accelerated because of this thing called the COVID-19. So the COVID-19 has kind of speed up the demand of video conferencing due to the lockdown in all parts. In a way, we are forced to actually use video conference, be it for work or be it for even just to hang out with friends. I think right now a lot of people are using it for entertainment as well. I do see a lot of DJs. You can actually watch some DJ live on Facebook and some of the video conferencing. So it's very interesting how people actually think out of the box and use video conferencing for their previous business. All right, so it kind of speed up the demand. And of course, we can see that a lot of events, seminars, and even schools, they are all using video conferencing to host their event as well. All right. And flights are stopped and many people are actually working from home. So all business discussion and meeting are moved online as well. Yeah. So like I said, in no situation will a company actually shut down 80 to 90% and ask all their staff to actually work from home. But unfortunately, because of the COVID, this is happening. I think even for a lot of major banks out there, they have like more than 95% of their staff at home working from home. So basically, you can see that all the contacts and all the communication is done either through phone or it is actually done through video conferencing like Zoom and WebEx, and of course, there are many other competitors out there. So as a result, because of this COVID-19, you can see that the daily user for Zoom spiked to 200 million in March, up from 10 million in December. Right, so 20 times increase in the number of daily users. That is how crazy the number is, okay? 20 times. And I think this is not the latest number. I see some report saying it's about 300 million, okay? But again, all these, I'm not sure how they actually get their figures, but it could be also some forecast. Yeah, but the number basically jumped like crazy. So I just want to touch on the usage of video conferencing as well. So you can see like online international workshops, online seminars, online conferences, okay, telepresence. This is something that is really, really interesting. I think in many areas, what happened is that, right? So for example, a patient just had a major operation. So after the operation, he's being brought back home. So what the doctors do is they actually do a teleconference, like a video conference, to check on the patient to make sure that everything is okay. You're able to eat well, no complication, no symptoms and everything. So all that is actually done through face-to-face, like a video conference. So I think that is actually more and more common, especially right now. You can even see a doctor through online conference as well. So that is going to be more and more common as well. So healthcare, the use of healthcare, as well as online education. So you can see very common. Even for example, for my personal own business, we actually run education workshop to share with people about investing. So in the past, we used to do live event. That means you get to see me, you get to touch me. No, like you don't get to touch me, but basically, yeah, you all get what I mean. You get to, I'll be in front of you, literally. Okay. But right now, the last time that I did it about 2 weeks ago, we actually had our first online seminar, online workshop lah. All right, done through Zoom, and it was pretty smooth. I personally find it. So I think more and more businesses are actually converting from a live event to actually an online event, and so that actually got started again because of COVID, because we are being forced, to stay at home. So we can actually be more creative, okay, to keep the business running. So let's talk about Zoom. Okay, so what are their key products over here? All right, so most of us, we are familiar with, of course, the Zoom meetings, Zoom chat, Zoom rooms. Okay, these are the common one that we have been using. Zoom phone is something that is new. Okay, so you need to subscribe to Zoom before you can go and use their Zoom phone. And of course, Zoom conference room connector, more for business. Webinar, Zoom webinar. Okay, for those of you who runs webinar, yeah, you can also use their video webinar product. And again, Zoom for developer and Zoom app marketplace. So pretty much their product, I wouldn't say it's very fanciful. It still comes down to whatever we are using right now. Okay, the Zoom, the software itself. So that is still their core product over here. So let's talk about the growth potential. Okay, let's start with the industry. Okay, as you can see from the first one, the global video conferencing market is predicted to reach a total value of 6.4 billion in 2020. And by 2023, from 6.4, it will increase to 13.82 billion. So almost double. All right. So again, I will say that this growth is being speed up because of the COVID situation. People are more exposed and it kind of just speed up the whole cycle of this. That's why you can also see that other than Zoom, there's more and more competitor coming into the market. Previously, they were probably focusing on other project, but suddenly you see all the big giants coming into this particular, trying to get a piece of this pie as well. And of course, subsequently, you can see that by 2021, 80% of the global internet traffic will actually be video. Okay, what does this mean? In fact, before even we talk about video conferencing, YouTube has been one of the fastest growing instrument out there in the web. Okay, most of us in the past. Okay, let's think about it this way. In the past, when I want to find, for example, when I want to learn how to cook, I don't know, spaghetti. So maybe 5 or 10 years ago, what I'll do is I'll look for the recipe. So I'll go to Google. I'll type how to cook spaghetti. Okay, but right now, if I want to learn how to cook spaghetti, will I actually go Google and will I look for a blog post that teach me how to cook spaghetti? Definitely no. The first place I'll go is I'll go to YouTube and I'll basically watch a YouTube video on how do I cook spaghetti. All right, then of course right now we know that there's this rise of this app called TikTok. All right, in China they call it Douyin, and again you get all kinds of information inside there, and everything is just video, short video, 10 seconds, 5 seconds, 20 seconds, right? So if you, okay, I just want to have a check. How many of you actually heard of this thing called Douyin or TikTok? If you heard of it, can you just put a 1? If you have never heard of it, just put a 0. Let me just do a check. I just want to make sure that we are all the same era one, same era. Hey, where's my chat? Okay, any 0. All right, good. So far I see all 1. All right. In fact, very interestingly, I just downloaded TikTok yesterday only. Okay, of course I know that a lot of people are using it. There's a lot of videos out there, but it haven't really got me to downloading it. And yesterday after I download, I think I spent like about 2 hours just sweeping through all the videos, and it was like it was so funny. Like, it was so funny. Very, very interesting. I think people are very creative when it comes to video. And I think moving forward, this will be the trend. Like I said, 80% over here. That is based on 2021. Right now, we are already 2020, which means that 1 year later, 80% of the traffic will be video. So video conferencing is going to be something that is very, very common. All right. And let's look at the last column. 20% of meeting room budget allocation will be used, okay, for businesses. So same thing, business will actually allocate more for online stuff, basically everything through remote instead of a physical meeting. So huge potential, I would say, in terms of the industry. And next, we look at the growth of Zoom. Okay, so this is actually extracted from the Zoom annual report. Okay, and this is basically what Zoom say lah. So for them, they say that in order for me to grow, in order for us to grow, first we must keep our existing customer happy. Secondly, we must drive new customer acquisition. So more customer must join. And of course, the third one, expand within existing customers. I think what they meant is actually, for example, in a company, one of the staff started using, then the one staff will actually ask the other staff to actually use, then more and more. Because how they actually charge, later I will share, they actually charge by per user. So for example, right now I'm using it, the premium services. Then I will also share with my friend, and my friend subsequently also go for the premium. They actually pay for it. So this is basically what they meant by expand within existing customers. And of course, innovate the platform continuously. I totally agree with this, and I can see the growth of Zoom, especially for the past 1 month. I think they have rolled out a lot of updates. The whole interface is changing every time I update it. Like almost every few days, they will come out with a new feature. Every few days, they will come out with a new feature. So that's really amazing. They are innovating like really continuously. And accelerate international expansion. Okay, again, they are already doing it. Grow their partnership ecosystem and continue to expand their platform. Right now, one of their key partners is actually Dropbox. All right, so I'm sure they're actually looking for more partnership as well. All right, so if we just had an overall glance on Zoom, this is what they say. This is what Zoom say. Our goal is to make Zoom meetings better than in-person meeting. And we want to make our customers happy, because happy customers will drive revenue growth. Short, simple, and basically this is their aim lah. All right, is to really to improve video conferencing and to make sure that they have a happy customer, because yeah, they believe that happy customer means more sales lah. That is what they feel. All right, so right now, okay, this is a new term that I just want to share with you guys. It's called ZOOM-BIE. Okay, so especially if you have been watching a lot of video conference since morning, probably right now you will be ZOOM-BIE-fied. So if you are a little bit ZOOM-BIE-fied, can you just put 000? If you are still okay to go on, can you put a 999? Okay, if you are ZOOM-BIE-fied, put 000. If you are still okay to go on, can you put 999? All right, Vincent is already ZOOM-BIE-fied. Okay, the rest, I see Terrence, Dexter, Rachel. Okay, AI, Alvin, May is still okay. Okay, so good to go. Then I will go on. I see a lot more. Fantastic. You guys are not ZOOM-BIE-fied. So now I move on to the financial checks of Zoom itself. Okay, let's look at the financial. So I have these 7 checks, okay, that can actually be applied for technically any company out there. So the first one is, of course, growing revenue. The second one is positive earnings per share. The third one is growing free cash flow. The fourth one is return on equity must be more than 15%. The fifth, net margin above 15%. Okay, and interest coverage more than 5, and PEG less than 2. Okay, just a correction. Net margin is more than 10%, not more than 15%. Okay, please help me to do a correction. But anyway, you can just take a quick photo or a quick snapshot of this. Later on, I'm going to explain to you guys exactly what all these actually represent. All right, I know some of you guys, especially if you have no background on financial, you'll be like, oh, I think I'm ZOOM-BIE-fied right now after looking at all this. Okay, but don't worry, I'm going to explain to you exactly what is this 1, 2, 3, 4, 5, 6, 7. Okay, using the next slide. So first of all, let's talk about business. Okay, in order for the business to actually do well, or I mean normal business, so first of all, the sales must go up. When a company sales goes up, it means that this is a good company to actually invest in. So that's number one. Sales must go up, and that relates to the previous slide. You know, your revenue must increase. So if your sales goes up, so for example, if we look at Zoom, when they have actually more people subscribing to Zoom, okay, what happened? It also means that profit will go up. All right, so sales go up. Subsequently, when they flow down, means that the profit also goes up, and that means the earnings per share will also increase. Okay, earnings per share will also increase. So when your profit of the company goes up, what happened is that it means that your cash flow should also go up. That means I'm talking about your bank account. So the company bank account should also go up as well. So that's number 1, number 2, and number 3. Then let's talk about number 4. Okay, so next we talk about this thing called capital. So the capital will flow to this thing called profit, and that is what we call efficiency. Okay, what do I mean by this? Okay, let me give you a scenario over here. Okay, y'all should be able to see my face right now, right? Can you see my face? Yes, okay, great. So why I want you guys, okay, not to see my face, but rather to see this flip chart over here. Yeah. So let me give you a few scenarios, okay? So the first scenario, okay, let's talk about, for example, I'm talking about, let's say this guy lah. This is A, and then I have B over here. All right. So what happened is that, right, both of them are business owner. Both A and B are business owner. So company A, right, that means this guy, he actually has this company, and this company has a profit of $10 million. Okay, $10 million. But this guy only has a profit of 100,000. So this is profit. So just from the look of it, we can say that, okay, A is making a lot more as compared to B. But the next thing we want to look at is how much capital are they actually given to make this particular amount. So for example, if I tell you A has a capital of 1 billion. All right, so using $1 billion capital, he can make 10 million. So based on that, how many percent is that? Can you just put into the chat group, how many percent? Using $1 billion to make 10 million. So that's only a 1%, right? All right. And for this guy B, okay, he's making 100,000, but his capital, okay, is actually given $1 million. So using $1 million, he's able to generate 100,000, and in this case, how many percent? It's actually 10%. So when we talk about efficiency, the efficient use of capital, who is more efficient, A or B? Put it inside the chat group. A or B, which one has a better use or efficiency of the capital? All right, definitely is B. Yeah. So I think that is why it is very important for us to also take a look at the efficiency on how they actually use the capital. Yes, so the efficiency over here. So if you refer back to the previous slide, basically the formula over there is what we are looking at to look at efficiency. And next up, we are going to look at the profitability. Okay, profitability. So again, what is this profitability? What is the difference between sales and what is the difference between profit, and why there's this thing called profitability? So same thing. Okay, we want to know. For example, we talk about char kway teow. We talk about char kway teow lah. I think y'all should be hungry right now. Okay. So for example, we have 2 char kway teow stores. Okay. So the first char kway teow stores, right? He sells the char kway teow one plate at $10. Okay, 1 plate at $10. Okay. But then, right, because he actually sell the char kway teow in a restaurant. So in a restaurant, he used the best kway teow. He used the best ham. He used the best waiter and everything. So the cost is going to be very high. So out of 1 plate of char kway teow that cost $10, his profit at the end of the day is only $1. Okay, so out of $10, he only make $1. Then I have another uncle, okay, at Old Airport Road selling char kway teow. He sell $4. But out of this $4, after minusing his salary, after minusing the ham, after minusing the kway teow, okay, he's able to make $2. So you can see in terms of the profitability, Uncle B has a 50%. He's able to make out of the $44, 50% of it. But the first one, out of the $10, although he's able to sell at a very high price, his revenue can be very high. But if you look at the profitability, it's only 10%. Okay, out of $10 that he sold, the net profit that he gets is only $1. So again, that is the percentage that we are looking at, and that is the profitability over here. So of course, the higher the profitability, the better it is. So same thing over here, higher profitability is better, higher efficiency is better as well. So this is the whole flow. And of course, let's look at the last one. Somebody draw a smiley face on my PowerPoint. Right, it's not me. Yeah, but thanks for the smiley face. Alright, and of course the last one, we have this thing called debt repayability. Okay, debt repayability. So what happens is that definitely in terms of listed company, what they will do is they will actually go for debt. They will actually borrow money. Why do they want to borrow money? Because they want to grow the business even faster. Of course, in the case of Zoom, I don't think they have much debt because they actually managed to raise a lot of money from their share itself. So they have quite a huge amount of capital. Okay, but of course, some companies, they actually have additional debt, short-term debt. So we also need to know that, right, whether this company, are they able to pay back the debt or not? Because right now, I'm sure that when you look at a lot of news out there, there's a lot of company going bankrupt. Okay, so one of the signs, okay, before a company go bankrupt is actually to look at this thing called, the last one, number 6, which just now I mentioned. Very, very powerful, interest coverage. Okay, interest coverage. So companies that has very low interest coverage is telling you that, hey, they can't even afford to pay back their debt. So anything above 5 is healthy. That means they can actually afford to pay the debt for 5 years using their profit. All right. So anything less than, I would say less than 5. In fact, I think the last few companies that went bankrupt, they were already in negative zone before they went bankrupt. So actually that is a huge red flag when you see a net margin, net margin, interest coverage, right? Yeah, interest coverage that is less than 1 or even negative. That is a huge red flag. So if you want to invest in a company, make sure that you check that particular point before you even jump in. So this is basically to summarize whatever I have explained for the previous slides, okay, based on number 1 to number 6. And of course, number 7, we talk about PEG that is less than 2. That one is to tell you whether Zoom, is it expensive or is it cheap. I didn't put it into this slide, but that is based on valuation. All right, based on valuation. So later I'll talk more about valuation as well. So what I did is basically I have listed down the financial check for Zoom. Okay, and then if it's a pass, I put in the green color. If it's a fail, I put in the red color. Moving for me. Okay, is there anything on with the slide? All good, all good. I think you all should be able to see. Okay, all good. Fantastic. Yeah. So again, right, over here, I'm not going to share, like, for example, it must pass 4 to be a good company, or anything less than 4 is bad, because end of the day, different company is going to have some different feature. For example, okay, we look at this thing called net margin. All right. So different industry will also have different net margin. For example, we look at companies like Amazon. Okay. How they make money is actually they have very, very high revenue, but because their market is so big, they can get a few cents from everybody and they will still make a lot of money. So their net margin can be maybe like 2%, 3%. But if you look at their net profit, it can still be a really, really huge number. So for companies that are really, really huge, with a huge network, sometimes their net margin can be less than 50%, but that doesn't mean that they are lousy. But if you talk about, let's say, a normal retail business, all right, retail business or even F&B, all right, this is a good check. Net margin must be more than 10%. Okay, this is again, you need to change it. Okay, net margin must be more than 10%. So PEG must be less than 2. Okay, as you can see over here, this is the criteria that I put. All right, so the lower the better. But in the case of Zoom, you can see right now, okay, it actually failed because why? It is actually at a 9.8, which is extremely high. Okay, which is extremely high. So just to also share with you guys one additional point that is not inside my slide. Okay, I just want to use my flip chart to also share with you guys. Because why? This is one of the triggering point to whether to buy or buy Zoom. So I just wanted to share with you guys. Okay. So I just wanted to share with you guys this thing called PE ratio. Okay, PE ratio. Okay, in short, today I won't really go in depth into sharing with you what exactly it is. But in short, right, if a company has a PE of 10, okay, it means that if you today invest in this company based on the earnings that it collects, you can get back your capital in 10 years. Okay, so just imagine that today you invest in your company, you give him 100,000, and every year that company is making you $10,000. So you collect 10,000, 10,000, 10,000, 10,000. So 10 years you get back your capital. All right, so you can see that PE ratio, the lower the better. If you have a PE ratio of 1, means that you invest 10,000, that year the company will make back 10,000 and you get back your capital. So that's the perfect scenario lah. Of course, less than 1 is even better lah. You put 10,000, half a year you get back. Okay, but let's look at the PE ratio of Zoom. Okay, PE ratio of Zoom. Okay, before I even release the answer, can you all just make a guess? How long, right, if let's say you invest in Zoom based on the earnings, how long you will get back your money? What is the PE ratio of Zoom? Just make a random guess. Just put into the chat group. 30, okay. 30 years, 30 years, okay. 20. Interesting, 12. Okay, keep it coming. I know some of you are going to go and check the answer. Okay, keep it coming. 30, 20. I even see like 100. Wow, invest in 100 to get 100 years to get back your money. Let me see if I can. So far, I haven't really seen any answer that is close, okay, close to the real answer. Okay, so keep it coming. If I see anything that is close, wow, okay. Alvin, 1666. All right, I think you got the answer from some website. Okay, yes. So actually, what Alvin actually typed in is very close. Of course, different website will give slightly different answer. Okay, but based on this website called, okay, let me share with you guys this website that I use. Let me just share screen also. Okay, based on this company that I use, I mean this website that I refer to, Zoom Video Communication, you can see over here. Okay, can you all see over here PE? Then we move to this thing called current. Can you all just type in this figure? What is this figure? 1593.78. Yeah, Gary said can leave already, don't need to buy already. Okay, wait. End of the day, whatever makes you money is not the PE ratio. If the PE ratio is high but the share price continue to shoot up, you still can make money, and so you should still stay on. Okay, but having said that, I'm not saying that the share price will go up. Okay, but anyway, let me just go back to my slide. So very interesting. Okay, PE ratio of Zoom is 1,500 plus. So which means that based on the earnings of Zoom right now, right, it will take you 1,593 years to make back your money if you invested in it. So okay maybe 10 generation or even 15 generation. All right, so everything, I think pretty much in terms of the financial check, I would say that they actually pass, I would say it's a pass based on the financial check, based on the revenue, the earnings per share, free cash flow, and the interest coverage. I would say that this is quite an amazing company, but of course the PEG is really something that is a bit too high in my personal opinion. And so right now I'm going to touch on, okay, what was the website? Morningstar. Okay, the website is called Morningstar. So this is the competitor of Zoom, okay, Cisco WebEx, okay. If you all heard of this company, can you just put a 1, 2, 3? Can you just type 1, 2, 3 if you have heard of this company? 1, 2, 3. If you have not heard of it, just put 3, 2, 1. If you have never heard of it, type 3, 2, 1. I just want to see how many of you have heard of it. Honestly, 3, 2, 1. Okay, so we do have people who have not used it. In fact, even for Zoom, I think if you ask me about 2 or 3 months back, I'm probably not too sure about this company Zoom as well. Oh, interesting. Founder of Zoom is from Cisco. Wow. Thanks Rachel for that info. Okay, so Vincent also say I never heard of it. Yeah. But in short, most of you guys, I would say 70% of you guys have heard of it. So they are actually one of the key main competitor of Zoom. Okay. But very interestingly, I just want to share with you that unfortunately for Zoom, they do not have competitor. Why do I say that? Because they have competitors. Let me share with you who are their competitors. This is another video conferencing company called GoToMeeting by LogMeIn. This is by Microsoft. It's called Microsoft Teams. Okay, this is another company called Blue Jeans Video Conferencing. And we have Skype, which has been in the market for a long time. We have this very interesting one, can play games some more. It's called House Party. And of course, the latest one, okay, not the latest, but one of the latest one is actually Facebook. Okay, Facebook is also coming with their own video conferencing. All right, the latest one that I heard that come into the market is from Google. Okay, the latest one is from Google. So I have not added in yet, but it's called Google Meet. That is the latest one. So you can see that Zoom has a lot of competitors. All right, a lot of competitors. And not only that, okay, those companies, I would say that majority of them are in the US. Okay, let's look at China, because China is a huge market. If you can get a small pie of a China market, okay, good enough. But unfortunately, again, Zoom tried to go into China, but China is dominated by these two giants. One of them will be Tencent. Okay, this app is called ZOOMBIE Meeting. You all can check it out. And of course, Alibaba, they don't use their own name. They use this TikTok. Very interesting. Why do they do not want to call it a Tencent meeting? Why Alibaba don't want to call it Alibaba Talk? But they want to use a very different name. So I do not know why, but China market is dominated by Tencent and Alibaba. So Zoom tried to go in, but they are facing a lot of issues. So it's very hard for them to actually jump into anyhow talk. Okay, it's very hard for Zoom to jump into the China market as well. So I would say that Zoom has strong competitor from both the US side as well as the China side as well. So again, this is another comparison for you guys, the top 5 free open source web conferencing software. I think they just randomly chose 5 lah. I haven't even heard of some of them. Livestorm, SamPage, Uber Conference. I think those are more of the corporate one. Then for the right hand side, we have the more common one like Skype, GoToWebinar, Blue Jeans. Right, so we can see that the price point, right, is pretty competitive. Is Zoom the cheapest? No. As you can see that Blue Jeans is at $12.49 per host per month. If you look at all the features, it's pretty much the same. Okay. Zoom, some people will say that Zoom is offering free. Okay, but in the market, I think there is many of them that is also offering free as well. Like WebEx, I know they are also offering free. So again, it is highly competitive, super competitive market. Reason being why, again, because it is a huge and growing industry. And because of the COVID, suddenly this market just grows so fast. Like I said just now, in another 1 or 2 years, this market is going to double. The whole industry is going to double. So everybody wants a piece of this pie, yes. So that's where all the giants also come in, and they will just directly compete with Zoom, as you can see. So let me share with you, okay? Don't worry, all is not lost yet. Zoom has certain advantage against the competitor. All right, and again, I get all this directly from the Zoom annual report. So this is what Zoom mentioned. They say that their own advantage. So first, they are a video first platform, okay? And they are cloud native architect, which actually a lot of them are also pretty similar. Functionality and scalability. Yes, the rest are also pretty functional and scalable. Ease of use and reliable. Ability to utilize existing infrastructures such as legacy conference room hardware. low total cost of ownership. Let me ask you, do you think this is an advantage that only Zoom have, or technically you can see that many of the other competitors out there, they also can do something similar? What do you guys think? Others have to, I think what Edwin mentioned is no mode, no mode. Okay, what about the rest? What do you think? Do you think this is really something that Zoom have that nobody else can do something similar? Okay, but much cheaper though. Others also have, but much cheaper. Yeah, their strength is ease of use, but that leads to security issues. Easy to achieve from other people. Yes, exactly. Okay, this is the exact problem that I also realized, is that the competitor can easily just come in, right? And I realized that many of their interface is so similar to Zoom. Okay, but unfortunately, I think Zoom cannot say that, hey, you copy me, you copy my interface, but I will say that many of the upcoming, the new one especially, the interface is just like almost, I can say, almost very, very similar to what Zoom is offering. And it's also very easy to use as well. So, I think that is always my biggest concern when it comes to this company, in a way that there's no moat. Okay, what do I mean by no moat? That means there is no protection from competitor. So competitor can basically just come in and they can actually just copy and do whatever it takes, whatever they are doing, and they can just take a piece of their customer base also. So from a customer point of view, there's no reason for me to actually stick to Zoom. If, let's say, for example, WebEx offer me a better platform, okay, because they are by Cisco, or for example, let's say Google Meet, because I have all my Gmail and stuff like that, so I want to use everything combined. So I will prefer to use Google Meet. And the price is, let's say, cheaper. Nothing is stopping me from jumping from Zoom to Google Meet, or maybe even Facebook, because I'm sure all of us, we have Facebook. So Facebook will definitely do some feature that will automatically link their Facebook together with their video conferencing. So again, like I said, for me, based on a consumer point of view, I would say that right now, Zoom is still pretty good. They are still giving me what I want, and the price, I'll say, is pretty reasonable. But as more and more competitor comes, and some of them are offering literally free, but with the same value as my paid one from Zoom, because they are trying to get trying to steal customer from Zoom. So what they do is, when they first started, maybe they'll give it for free. So I might actually just jump, or in fact, I can just jump from Zoom to another competitor. All I need to do is just close off my account and then just stop my subscription. I don't have like a login period with Zoom for like 1 year or 2 years, just like our handphone. So there's no login for Zoom. So this is also a new term, okay, that I'm sure you guys are familiar with it. It's called the Zoom bombing, okay, Zoom bombing. So what is Zoom bombing? Okay, basically, like right now, I'm having my presentation and my sharing. But for example, just now, I don't know who draw the smiley face, okay, that is a small form of Zoom bombing. So somebody come in and disrupt my presentation. All right, so of course, in certain cases, for example, I think in some of the schools, okay, somebody actually jump in and played some obscene video. So that is again a form of Zoom bombing. So I think Zoom does face this kind of issue. And let's look at some of the recent news over here. So let's start with the top left. Zoom video app login were put on sale on dark web reports. So they actually didn't kind of protect all your logins. So you can see that it was on sale for $1.25 for each login. So if you want to go into somebody else's room, you can actually buy it for $1.25 US dollar, and then you can see what people are talking about. Okay, so I mean, that is actually one of the security issue. Then Indian government is the latest to actually ban Zoom. So they say that video conferencing is not safe for government use, because maybe the government is trying to discuss, hey, let's launch a missile, and then somebody actually heard it and actually share with other people. So the government, because right now they are also locked down, so they are also at home, and they are also a bit wary of all this video conferencing. And of course, Zoom is actually one of them that they actually ban. Share with Pakistan. Okay, yeah. So Zoom admits that call got mistakenly routed through China. Yeah. So what happened is that all this data that we actually transmit, right? It has to go through this thing called the data center. So most of the data center that Zoom have is actually in US, but they actually do have some data center in China. So what happened is that during this COVID, suddenly everybody jumped and use Zoom. So what happened is that because of this huge influx, the US server can't actually manage. So they actually route some of this data to go through the China data center. And it was actually discovered. So people will be like, hey, what happened is if the China want to take my information, because once your data go through China, China has the right to actually obtain all this data. So a lot of people is like, wow, then all my secret, China will know all my secret and stuff like that. So I think that was a huge issue, okay, that Zoom actually, that actually happened to Zoom. And that was why their share price actually got beaten down previously. And of course, the last one, Singapore banned teachers from using Zoom after hackers post obscene images on screen. So those are all the bad news with Zoom, unfortunately. Okay, so what I'm going to do right now, okay, this is the last part. I'm going to do a summary on some of the key point on buy, as well as some of the key point for buy, BYE. Okay, so let's start with the buy. So I'll say that these are some of the reasons why I find that this is a great company. First of all, I think the revenue growth is crazy. You can see from the jump from 10 million to 200 million, and it is still constantly growing. Okay, so user base and revenue growth is growing, and they will continue to do so even after COVID-19. Okay, many people still continue to jump to video conferencing and continue to stay on using video conferencing. Next, this is a high profit margin business with amazing growth potential in the video conferencing industry. Okay, so right now, actually, most of their cost, okay, that means whatever money they earn, right, most of them actually go to their sales, Okay, that means those people that are trying to sell, help them to sell this product to the company and also to individual consumer. So a huge part actually go to the sales part because they're actually trying to gain as much market share as possible. But once I think they establish a certain branding, okay, this business itself is super high profit. You realize that they don't really have huge operating costs. Okay, all they need is data center, and they just need people to manage and create new features for the software itself. It means a software business. So amazing growth potential in the video conferencing industry. And of course, the last one, amazing product, simple to use, free to use model to gain database without massive marketing. So I think they were one of the first to actually offer for free. And once people get used to it, okay, people can actually subscribe to their premium service. So that is their model. Okay, but again, many people are actually copying what they are doing. So that is, of course, one of the disadvantage as well. So these are the buy factor. Okay, overall, I think that it is in a huge growth industry. It is a good margin business, and they have amazing product, really simple to use, and yeah, revolutionary. Okay, now let's talk about the buy. So let's start with the first one. Very high free account users relative to paid subscribers. So the number that I mentioned just now are the 200 million daily user. Okay, those are total amount of people using it, but many of them are actually free one because it's free, so people just use for free. Okay, and for example, for myself right now, although I'm talking to 60 over people, but how many accounts do I actually need? Do we need like 60 accounts to actually use it? The answer is no. I just need one account. Okay, and then I can talk to even 100 people or even more. In fact, I think we just upgraded our system. Okay, because the last time we actually conducted something like that, we had 100 over people. So how they actually make us pay more is they have a restriction, 100 participants. If you want more than 100, then you have to pay more. Yeah, so in fact, we actually paid more because we expect more people to actually come in, more than 100 subsequently for our future sharing. So that is one way that they can actually make us to pay more. But again, how many people will actually pay more? I think it really quite subjective. Again, I think secondly, no mode. Competitor can easily come in. Okay, I think this is one of the things that I really don't like about Zoom. I mean, other than that, I really love this company. The financial is still, I would say, quite amazing, other than the valuation, but no mode. So competitor can come in, and you can look at the competitor that they have. They are not the small player. They are people like Facebook, Microsoft, Cisco, Google. I think maybe in the future, Amazon might even just come in and take a piece of this pie. They are competing with the giants in the tech industry. So in terms of money, in terms of resources, I would say that it is going to be a hard fight for Zoom, because again, this is their one main product. They only have that one product. If Facebook fail, I mean, for the video conferencing, they still make money. I mean, their core way of making money is not from video conferencing, it's actually from advertising. So Facebook can easily just come in, and they can even do it for free, just to get a database. Now they can just do it for free, so everybody can just use it. And I think right now they are offering up to 50 people for totally free. So that's for Facebook. Then of course the last one is current valuation is just way too expensive, even after factoring their potential growth. So I look at it, I ask myself, like right now the PE is 1,500. So if let's say they are able to go to a PE of 150, so in order for them to get 150 PE, it means that their earnings must grow 10 times. Okay, their earnings must grow 10 times. So I'm assuming that their revenue will grow 10 times. So right now they are getting like a 600 million revenue. So I ask myself, can they actually reach 6 billion in the next couple of years? If they are the only player, I think it is highly possible. But with so many players out there in the market, I really doubt, or I just find that it is going to be a challenge for them. It is definitely going to be a challenge for them, okay, to actually grow like even 10 times. So much so that the PE is still like $100 over. Okay, $100 over. So that is just personally for me, in terms of the current valuation, it is just way too expensive based on fundamental. So this is the buy factor. So now, this is the key thing that you guys would actually want. I don't know whether is it a key thing, but I think this is going to be the key highlight of this particular sharing. So before I release my personal take on Zoom, maybe you guys can actually share your result. What do you think? Whether is it a buy or is it a buy? Whether it's a buy or buy, yeah. So please type, okay, please type into the chat whether is it a buy or buy. Yi Yang is still bullish. Victor is also bullish. Victor, so far I see 1, 2, 3, 4, 5, 6 say bye bye. 1 say bye, 7 say bye bye. Can trade. Yes, I know. Buy and buy. Okay, interesting. Okay, trade, not hold, not buy to hold. Okay, interesting. Hi Ivy, good premium. Okay. Yes. I think what y'all shared does makes a point. It is whether are you actually buying this to trade? Because why? It can be expensive, but nothing is stopping it from becoming more expensive. Right now the price is, I don't know how much is the price, $130, $140. Nothing is stopping it to go back to even $200 or even up to $300-400, because expensive will just become more and more expensive because everybody is like using Zoom right now. But of course, based on the fundamental point of view, you might find that, hey, this is a bit expensive, and in terms of the growth potential, it might a little bit challenging. In terms of the mode, there's no mode for this company. So controversial. Okay, but let me just share my personal take. Okay, in 3, 2, 1. Okay, let's see who is going to win. Okay, yeah, so this is my personal take. Okay, it's going to be a bye. Okay, a drum roll. Yeah. So again, I just wanted to clarify again. When I say bye, right? If somebody type, there's a Zoom bombing happening. Yeah, when I say bye, it's because I'm actually looking at it from a fundamental perspective. That means I'm looking at whether is this a good company to buy and hold for the long term. But I think like what you guys actually mentioned, if you are looking to trade for the short term or just by riding the trend, you can actually, there might be opportunity for you to actually ride the trend, because right now I think it is still going up, and can it go higher? I think there is an opportunity to go higher as well. So for short-term trading, yes, you can actually go for the green color BUY. right? But from a fundamental point of view, if you ask me whether should I buy this and then hold it, I would say that definitely this is not going to be in my shopping list. Okay, so for now, this is going to be a bye-bye for me lah. All right, this is going to be a bye-bye for me. All right, so yeah, that is the end of my presentation for today. Yeah, let me show you guys my face. Yes, so basically that is my presentation for Zoom. I hope it's going to be something of a new insight for you guys. Okay, but very interesting. Later Zoom king me up. Okay, but very interestingly is okay. I just hope to actually get some of the feedback from you guys as well. Okay, anything that is relevant to Zoom, anything that I have actually missed out. Okay, what we are going to do is we are going to come back to this Zoom as well, maybe in about 3 months time or even 6 months down the road. We're going to see if anything changed. Maybe they might come up with something that is able to lock down the customer so that once you go to Zoom, you cannot get out. Okay, once you go to Zoom, you cannot get out. So yeah, that is for me for this company. And of course, the next upcoming series, I'm going to share one Singapore stocks. Okay, so I have not really decided which company, which Singapore stock I'm going to share. So maybe you guys can actually share with me as well, which are some of the Singapore stocks that you guys will be interested to look into. So I try to cover at least 1 or 2 company a week, 1 US stock and 1 Singapore stocks every single week. Hopefully through something like this, so we will have some discussion, and I think end of the day is whether is it going to be a buy or bye-bye. All right, based on my personal take again. So yeah, do share with me some of the Singapore companies, and then you can also post into our Facebook, and just drop us a message if you want to look at any Singapore company, and then we might just feature your company, and then we will do our buy series for our next upcoming one. Okay, so again, thanks everyone for coming in. Okay, thanks everyone for tuning in. So do follow us on Telegram as well as on Facebook. So we will continue to give you guys a lot of interesting value, in a lot of new insight as well. All right, if you want to find out more about how to invest in the US stock market, do follow us on our Telegram as well. All right, and look forward to actually meeting you guys after this COVID is over, real life. Okay, not through Zoom. Yeah. So thanks everyone, and hope to see you guys real soon. Yeah, and yeah, basically that's all. And basically invest safe, stay safe, and I'll see you guys soon. All right, bye guys.